The following is a presentation of TFNN. The Morning Market Kickoff with your host, Tommy O'Brien. Now, Tommy O'Brien.
Good morning, everyone. Basil Chapman sitting in for Tommy O'Brien. Tommy is doing the engineering for Larry's show right now. Larry's doing a live show. There's still time to get in there. You know, Larry does a fantastic show. He's just the way he articulates the patterns, the way he produces a number and an extension point that is the entry point for a short or a long is fabulous. I've just followed him for years and years. It's magic the way he does. Well, it's really not magic because he has a formula, so there's no magic to it. It's just fantastic. All right, let's get to the markets. Right now, this is the morning market kickoff, so we'll go with the news. The news, of course, last night, everything was tootling along very nicely. It looked like it could be a one-off for the Boeing situation. The market had come back quite strongly. All of a sudden, you get this news that Israel attacked Iran. So far, very strategically, very precisely, and we'll find out very soon whether or not this is going to be a continuation. I suspect it's not a one-off. I thought that there was a chance that there was going to be a one-off for the rebound in the market, just so that we can keep going sideways with a very limited upside. That's what I've been talking about all week. The reason why I've taken quite a bit off our long positions, while we had short positions, got stopped out of two with fractional losses. They would be S&P 3 times short, would have been fantastic. However, we did get, and it was just while I was doing my show, I had said, we want to go short 3 times. We are 3 times along the Dow from way down. So as a kind of a trend that I thought would happen if the Boeing situation continued as a negative for the market rather than just being a one-off, that we would go short the Dow. So we went 3 times short. But I had sent out a note while I was doing my show to say, don't buy, because the market kept coming back so strongly. Don't buy the short position. But by the time my updated newsletter had got to the to subscribers, we had already bought it. So we are short the Dow via the SDOW. This is a trading position, short-term trading position. And for once, we had some luck. We've had some bad luck before when we had positions in add-on positions to Robinhood, which we had bought in the 16s, and then we had taken a little bit off, and then we around about the yes, Robinhood, right, around about this cluster formation right here. We bought in at in the 48s, and we just got taken out. We had, on the same day, we had 2 positions. One was going to be a call for a new trading position as opposed to the 16 entry point that we had from way back. You can see right over there, we're still long that. But, and then we got stopped out for both the trading and the call position of that particular day by fractions, and then it just moves straight up. So that was unfortunate, and the same thing happened with Chewy. Now I'm looking back and saying, thank goodness. But the Chewy, we had beautiful entry at the 38 level right there, 36, 38, between there, and there was a sudden move down right there. We got taken out by a fraction, and then it went straight up from the 38 to 48, up 10 points, and then it had a round number, Chewy CHWY, had a round number open on the 6th of 48.62 high, and that was it. It's trading now down at the 41 level. So, well, we would have been taking a little bit off, and we probably would have got stopped out in any case. But that would have been a nice trade. So a little bit of luck for a change instead of the bad luck. Now, one of the things that's really, now I can go through the market. Here we go. The YM, this is the Dow Futures, evening Dow Futures continuous contract. Remember the Chapman wave? The object, the criteria is to get you from a buy signal from a low point to go to 4 higher peaks. Peak A is the first, 1 penny above A starts leg B, makes a peak B, 1 penny above peak B starts leg C, and then you get to a D. 4 higher peaks is the objective, where you get upgraded from a buy signal to a buy mode, and that's where other things can happen. And over the decades, when we get to D, not every time, but very often, that's when we start to implement some kind of a short position, which is kind of what we did right here with that doji candle. And now what's interesting, it can go up to an E, F, and G, but D is the objective, and it has turned down from this one, peak E before, peak D this time. And look what you've got. You've got this, we haven't even got to the inside track, repellent zone. So I'm watching this closely, and look at this 9-period moving average over the 14. I wonder if I can do that. Should I just take one of these charts? Do I have a daily chart here? So this is the peak E at the 200-period moving average in the E mini right here. Look, I don't know how it ran so far. It went all the way down to 59.27. Is that right? 59.27.50 was the low at 22.50. So that is at about 10.50 last night. Now, what's really important about this is that we've got a move right to the 200-period moving average, and you got repelled in the 10-minute chart. Now, let me just see if I've got on this particular window here, if I've got a daily. I wanted to show you something. A mini, 1 minute. Do I have a daily? Do I have a daily? Do I hear it once? Do I hear it twice? Do I? No, I don't. God, you'd think that, there it is. Microsoft daily. Let's just see where that takes me. Okay, that's, why did I want the daily? Oh, to show you the 9-period moving average. So look, so Microsoft is still very good. So this is, why am I doing that? Oh, to show you the YM, to show you all of these. Look, here's the YM. That green 9-period moving average has been absolutely sacrosanct since it crossed positive back on the 1st of May. And we are still green. Today, we might start to see a dip, and it could go much lower, but it hasn't yet. The MACD is turned down. The stochastic is flat at 80%. That's still very good. Over 80% is good. Isn't that 86? It's 86%. And the on-balance volume is kind of weak. So overall, the 9 is already my indicator of last resort, and it's looking good. Look at the E-mini. Green. Look at that, green. When the 9-period moving average flips over the 14-period moving average, on the upside it goes green, the downside it goes pink, and it's green. Look at the NQ. The NQ right now, so the E-mini is down, what is that, 60-something? Yeah, the E-mini is down 60 at 59.90 at 21,648. You got the NQ down 283, the RTY, which is the Russell 2000. Finally, the body of the candle has gone below the green. So this means it's getting closer to turning pink, but it hasn't yet. So the RTY, the Russell 2000 futures, down 33 at 2107. Let's just see what's happening here with gold. Gold, look how strong that is. Trying to retest all those upper levels. I'll be back in a moment. Basil Chapman, Tiger Technicians. Tiger Technicians are coming up after this. This is the Morning Market Kickoff. Tommy O'Brien Show.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Building wealth trading in the stock market seems impossible to most people. They think it's too volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and techniques to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at TFNN.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at TFNN.com. TFNN, educating investors.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
This portion of the Morning Market Kickoff is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
He usually doesn't show the morning market kickoff because he's helping with Larry's live show. So I just wanted to show you here. So this is Bitcoin. See this M-shaped pattern right here? Well, what we're looking at is Bitcoin is down about almost 2,000 at 105,100. And I'm anticipating that this low is going to be tested and maybe even taken out. So, but the green 9p moving average is still there. But I think that by Tuesday or Wednesday of next week, we should see it go pink. The MACD is deflected lower. The stochastic still very weak at the in the 63% area. The on-balance volume is weak. Just wanted to show you silver. Silver's trading at. So I'm just using this black chart background with just one simple indicator that really gives you a tremendous amount of information, and that's the 914 that changes to green when it's positive and pink when it's negative. Green, and you're sort of stalling out here in silver. It is up a little bit. It's unchanged actually right now. So I think that this is a little different chart to gold. Gold is the geopolitical economic barometer. It's the insurance policy that people go to, not people, countries. Huge enterprises go to gold as a means of, just like the bonds. Just the amount of money that goes into bonds is just way greater than the everything in the stock exchange. And in terms of gold, that is the insurance policy. So that's where money's going. You can see gold is up 58 at 34.60. Now I want to just get out of these particular patterns before we get to the live show. You can see, so this is the 10-minute chart, went to a peak E. It went twice since the low that was made back at about 11 o'clock this last night, Eastern time. Hit the 200, look how it broke the 200-period moving average, just smashed down. Now, what's interesting is every Friday afternoon after the market closes, I do my hour and a half. It's like a webinar, but I haven't had a chance to set up a webinar, so I use it as a video that gives an overview of where we are, what we're looking at, what stocks we're at, what our positions are, what we're looking to buy, etc. It's really a very intensive overview and analysis and Chapman Wave methodology in different areas. So I did that last night because I won't be able to do it this afternoon. What happened was I didn't realize I've had some technical issues in the sense that things are working, but there's always a mystery out there. And what happened is I recorded my show not realizing that there was a rebroadcast of Tommy's show at the same time. So you can't hear anything. It's all garbled. But basically for my subscribers, all I want you to do is to say, and I had no idea what was happening, a conflagration in Iran, between Israel and Iran. All I knew was that I was doing my webinar, my video, and I had to cover a lot of things. So I covered everything in detail, not looking at the upside, saying these are the upsides, a lot of limited upside. I've got Chapman Wave. I went to do the show every day this week. I've been going through this. Now, let me just see if I can do it right now. So this is with the Chapman Wave automated support and resistance levels. And look, here's the Dow. I said, look at all those resistance levels. Every time there's been resistance level, you've had some kind of a pullback. There is support around about the 41,700s, but there's a lot of resistance at the 43,162 higher. Look at the S&P. Look at the resistance, automated resistance levels. Look at that, a ton of them in the S&P. Look at the QQQ NDX 100 trading vehicle, 542.46. It went just under that. No, it actually tagged it. And now it's down 6.88 at 526. Look at the IWM. So these are automated. Based on the MACD and the stochastic, I had the late Herb Bruin, who used to do a lot of work for me, had this, and he made my Chapman Wave projections. He's passed away since then. It's such a shame because we used to have a good time together, but he did a great amount of work for me. And look, here's the IWM at the 200-period resistance with a lot of resistance at 211. It's at 209 right now, down 335. Look at gold. Gold has a lot of resistance levels and is tagging them. Now, what happens sometimes is that, and this is the way I use it when I'm doing futures, sometimes that isn't just a repellent zone, it is actually a target zone. And if the strength is very strong, what happens is if it takes those out, you just look at the next one, if there is a next one, and it's very positive. But right now you can see gold has a tremendous amount of resistance everywhere. 34.54, it's at 34.61, 34. Just look, all the way 34.98, 35.14, 35.71. And then there's a lot of support in the 31.73s. So that's the way we're looking at it now. Let's go to Bitcoin. Bitcoin has tremendous resistance, but wait a minute, it's got a ton of support at 10,350 to 10,180. So I'll get out of this for a moment, and I just want to go back to this chart right here. And I wanted to show you, this is what we're looking at. So before we go to the 9:30 start time, peak D's, where we start to say, be careful, that's where other things can happen. Well, we got to a D, and now we're pulling back 513 in the YM, which is the trading vehicle for the Dow. The S&P, this is the E-mini, gone to a G/B, but if you look at the S&P cash from yesterday, it had this F/B, and it had almost, it was like an inside day. But look what's happening. If we start to pull, look at the 9-period moving averages. Oh, that's what I wanted to show you with the 2 lines. It doesn't matter. I showed you with the 1 line. So the 2 lines, this is green is the 9-period moving average, black is the 14. The one I showed you is the composite, where it only shows you the price when it crosses over and changing color. So this whole thing from there would have been green, right? Okay, so this is very important. It is still fantastically positive, just on a purely statistical basis. The price is over the 9. The 9 is over the 14. The MACD is flat, and if it starts to expand, it'll take on a new down arrow, but it hasn't done that yet. So it's holding steady. The relative strength is good, not as good as it was at the last high of 59.68, and the stochastic's fabulous at 94%. So the irony of this whole thing is that it was an aberration. And that whole thing with Boeing yesterday, let's see where Boeing is. So Boeing is down another 3 points. That is very bad. There's your peak D. Peak D is where other things can happen. And let's look at GE. GE is trading down almost 5 points at 235. It hit 257.47 at a peak E the other day, just one bar after the D. And it looks vulnerable down to this level right here. So I said to subscribers, because my video just was unlistenable because it had two things going on at the same time, in my show at 10 o'clock, I will go through a lot of it as if it was my video, and it'll be with positions that we have and what are the support levels, where we want to add back to the longs that we have, our core longs. I love them. I don't want to be out of the core positions. Where do we add to it? I'll be right back. Basil Chapman sitting in for Tommy O'Brien. This is the Morning Market Kickoff. I'll be right back.
This year has already been a wild ride for the market. We started off heavily in the red, traversed back to all-time highs, and we now have a trade war looming. Trying to play this chop as an individual trader leads to death by 1,000 cuts. Where does this market go next? Should I add to this position or cut my losses? Where is the next opportunity? Tariffs, trade wars, analysis paralysis. Don't become a victim of this intense market. Instead, join Larry Pesavento over the second and fourth Friday of every month for 3 hours of live trading. Larry has been through many markets just like this one, and the insight he provides is invaluable. The dates for this month are April 11th and 25th, 9 a.m. to noon Eastern Time. Get in here and let's start trading. TFNN, educating investors.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Tommy O'Brien Show. This is the Morning Market Kickoff. I'll also be doing my show, and what I said to both subscribers and out here a moment ago is that in my show at 10 o'clock, because my video, which was over an hour long, but really talking about not so much the upside, because all week I've been saying the upside looks very limited, but we don't yet have the DNI. And let me just go through this right now, and you'll see exactly what I'm talking about. Here we go. This is called the Chapman Wave Dark News Index, DNI, using the Dow Daily Chart, and I put this in as a rectangle saying, I believe we might have had an internal high, and I'm waiting for the residual high, earthquake and aftershock. How does it happen? Will it happen? Can it happen? And basically, the market never goes down for long unless there's a dark news, unless there's something that the market perceives as bad news. All news, the same news on a Thursday, could have the market move up, as it does when it comes out on Friday, and then suddenly it perceives that same news to be negative and it tanks. So you never know what the result will be. So I drew this in. Every other time we've had it, you've had these sharp pullbacks. I don't want to get into it now, go into it in my show, but most importantly, keep in mind that we did not have this dark news. It's not the candle, it's the news itself, just this black, dark news. It's like a cloud is overhead, and all of a sudden it gets darker and darker and darker, and then whoosh, you get the storm. We didn't have that. And then yesterday we had the one-off with GE tanking. The market was down huge overnight with Boeing and GE, who does makes the engines for Boeing, and but then it suddenly came back strongly. So here we go. We're looking at, I'm getting out of that, I'm going to this chart right here. Okay, so the Dow's opened, it's down 400. This is, so far, this is amazing action after when you think that this could be World War III, who knows what it could have been. But the market's perceiving it as, hey, not that bad. And at this particular point, what I wanted to do is to add back the short positions that we had in the SPXS, the 3-time short, that just got taken out, and then of course they exploded overnight. But I think that it's worth considering, and we've got the SDOW 3-time short, the Dow, even though we're long, but from way down. This is a trading position only in the shorter term, meaning we're talking a week, maybe 2 weeks, maybe days, I don't know, but a shorter term position. And most importantly, that 9-period moving average is still way over the 14, even with this news. To go negative, you probably have to see the Dow down at 41,800 or lower. That's you were at 42,468. That's a long way down. The other thing is, within the context of the S&P, look at this, is the cash S&P. It made a peak F/B. There's an alternate count. Don't have to do that now. I'll do that in my show at 10 o'clock. But the 9 is still acting really well. This is down 41. It was down over 100 and something points last night. Now it's at 6,004. So absolutely, there isn't the kind of intense selling. So I had some really good questions in the Tiger Den, and I'll go through them in my show. One is using the UVXY, but when you use something that deteriorates every single day, I find it's very difficult to use that. I much prefer to go to the core. So look, the UVXY, you can't really get a left side, right side, because every day it gets shrunk. And this is an instrument. The UVXY was once at 15 million. Round number, 15 million at the top, right? Oh no, it was more than that. It was at 21 million for. So you can't do that. It's just, I find that very difficult. I have to go apples to apples. For instance, look, here's the gold. Let me just run the indexes. So where are we right now? We're down. The S&P is down 508 at 42,465. I'm going to go through all the support levels and what we're looking at in much greater detail in my show at 10 o'clock, as if it was my video that I overview that you can't use because I recorded it, but in the background was a recording from TFNN, so you've got these two streams going on at the same time, impossible to listen to. So this says to me, now you've got to be careful. The rectangle formation says that in the Dow, 42,200 to 42,000 will really be the first decent support. If it holds, it means, maybe this is not so bad. We can go sideways. That's fine. What I am looking at is that the upside is very limited. It's more that we've got an umbrella, a cap on the upside The downside is fluid. You can go to lower lows, right? Look at the S&P. The S&P right now came back very strongly from the overnight low. It's trading down 42 at 6,003. The QQQ, and that has support at, I would put it at 5970 to 5,900 over the next week. The QQQ, one more Q, there it is trading down 4.50 at 529.24. Now, I have a trouble with this because no way can I count this as anything other than a peak C. Can it fail at a peak C in the daily chart? Well, it can, but it's very unusual. But if it does, it means that it's taken out this low right here, the low of the, this is the QQQ Invesco QQ Trust Series, the Index 100 trading vehicle. 505.58 was the low of the 23rd of May. If it goes to 505.57, that negates that whole thing completely. But you can fail, not you, but the price of whatever we're following, if it's underneath the previous high. If it's at all-time highs, that's really unusual. It does, but it's very unusual to fail at anything but a D or higher, peak D, the fourth highest peak, or the fifth, sixth, seventh highest peak. But in this case, it's under the 540.81 all-time high of February of this year, plunges down to 400, screams back up to right here, 538, was it? 536.78 3 days ago, and now it's down. And look, it's still a green candle. Can you believe it's a green candle instead of being red? So there is buying coming in. This is what I'm suspecting. I'm suspecting that a lot of people missed out shorting. Therefore, they want a big rally in which to have the opportunity to short, because the bias now is, the thinking says we should be going, at least, doesn't tell you how far down, but it should be going to lower lows at this particular point. That's the thinking. It's my thinking actually right now, and that's how we're dealing with this. Now let's go to the IWM, which is the Russell 2000, which was performing so well. That went to a peak C. It's pulling back sharply. There is another way I can count it. You say that was a peak D. This is a brand new buy, and that became peak E/A, F/B, G/C, and now this has gone to a D right here. There I can do it, but I can't do it if there's no other wave count. Let's go to the SMHs because they are so important. Look, SMHs, semiconductors down 4 at 259.11. Isn't this fascinating? Look, NVIDIA, which is only down 2, is at 142.96. It's had, over the last 5 sessions, it's had 2 round number highs, 145.00. Peak C1, potential peak C2, but look at that. It's holding beautifully. What the heck is going on? I'll be right back. Basil Chapman, sitting in for Tommy's Hour. I'll be right back. The Dow's down 477.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at direction.com. Read carefully. Distributor Foresight Fund Services, LLC. Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Okay, so a couple of questions came in, which I don't know how meaningful they are right now, but it doesn't matter. A question is a question. So a question came in about MU. I didn't have a chance to do, I always do is update. I've done Micron since it was an IPO. But look at this weekly chart, went to a leg A, a single leg A up from the 62-ish area to where it is right now. In fact, it's only down 23 cents at 150. It's called 116. That is spectacular action. And look at this. You see these candles here? It actually looks like what are the fan? What are those? Not an ostrich, but yeah. So this is like the tail of a bird. Look at that. It actually looks like a biotech. Every single month for 1, 2, 3, 4, 5, 6, 7. For 7 months, every single wick had this long shadow and the body way down, and it made an arch formation. And then it tumbles from the area that it was trading in at about 105, 110, and it slumps down to the 62 level, and now it's had this huge candle in the monthly chart. So let me just do this real quickly. All I do is I find the lowest low. Always go to the left to make sure you got the lowest low. I can put an up arrow in because I know visually. It would be stupid not to. So this becomes, from this low, every higher bar can start a wave count. So it goes A. This is still an A because why? Because this is your starting point, Micron, right here, right here. And this becomes another A right there, and then it becomes a B. When you get an O, this is called a restart in the Chapman wave methodology. When you get this configuration and you haven't taken out the original starting point, that's really important. But look at this, C, D, if within 2 bars, after D, it goes within 3 bars, it goes to a higher high, immediately think, Chapman wave instant restart. I always do this. I put a plus sign over the D, a plus sign under it, and then I put a yellow circle right there, or an oval, boom, right there. And that says, keep an alternate count on the next waves up. And if the MACD is very strong and the 914 is very strong, it's probably going to go to an F, maybe even a G, but not a D until it pulls back. And then it goes to a D. So let's see what we've got here. Remember, I'm just going alphabetically, sequentially. That becomes E. I'm thinking E/A, F/B. And then it goes to a pullback. And then it starts another move to the upside. And that's higher. So then even if that was a G, there's never an H. So there's no way that could be an H. That has to be either a brand new A over there and a B over there, or we've got an instant restart that goes E, F/B, and this becomes G/C, So the methodology is very simple. It sounds the words. You got all these words. Visually, one picture is 1,000 words, and then this becomes a D. So right here it says, maybe at this point with the doji candle D, well, let me look for round numbers there. Is any clue? Let's see. On the 10th, no round number. On the high that was made on the 11th, no round number. Yesterday, no round number. Today, no round. So it's still active. It's doing very nicely. So that's why I'm saying I didn't want to get overly carried away to the short side, but I want you to take our longs and take as much at this particular phase, especially when like the AIQ, where we added a whole new position. I want to take some off there because it's done so well. That's the AI ETF for the artificial intelligence. But look at this. This is fabulous action. You wouldn't even know that there's a potential war going to break out, that the Dow is down 512, the S&P is down 43, the QQQs are down sharply, down over 4 points. This is down 36 cents. This is fantastic action. So I've made a big point of saying this is rotational. There's some things that are going to suffer more than others. And even within a sector, you might have some stocks that are holding well and others are really tanking. So this is holding MU, holding fantastic. Where would I say key support is? 110 is the 9-period exponential moving average. 107 is the 14. Those are the first support levels. If there is a sudden slide for some reason, this has to do with the semiconductors, Micron, MU, then has 100 all the way to 105, 101. That's tremendous support. If it goes under that, we're looking at something completely different. I'm pleased I got that. GDX. The GDX is up 47 cents at 53.99. It hasn't taken out the 54.62 high that was made about 7 sessions ago. That was a peak F. There is an instant restart, so this is active, but more likely it's going to be some kind of a double top. Now, if the GDX gold, but let's call the GDX, which is the market vectors gold miner ETF, the target I had for it, and we are long physical gold, PHYS, for quite some time, taking a little bit, so to try to keep as much of the core position as possible. This is the first target that we had that goes back to 2012, September of 55.25. The high that was made this month is 54.43. So we're very close to that particular target. That's a 5-year? 2012. I would say 20, that's a 13-year. A 13-year left side, right side price time match, not bad. But that's what I'm looking at. Where would gold start to fail? If the GDX, well, first of all, let's go to the GDX. The GDX, if it takes out this low in the next week, that is the low of the 10th of June, which is at 51.12, then it becomes vulnerable to limited upside, and then the whole area to the 48, 47 area becomes a cushion that must hold. Okay, and the gold itself, where would it fail? Well, this is the first day that it's broken above the Chapman wave inside track propellant zone. This was a repellent zone, now it's a propellant zone, and that makes the whole area of 3,400 to 3,375 really important support. If it takes that out and says, hasn't been able to hold above this what should have been a springboard. And if you look at the weekly chart, I drew in this rectangle and said, I think that this is going to be the limit for a little while. I didn't say, I said I wasn't sure about the low, but now I can make the low. I can use this rectangle and say, there it is. So 34.73 goes above it, and then all of a sudden you're looking at 35, 37, the high of April in the continuous contract as a target, and it's making a cup formation. It's going to try for that. But in the meantime, back at the ranch, just on this week alone, look at that nice green candle. So that says the 9-period moving average and the low coincides at 33.18, a close below 33.18. That's a long way down. In this environment, I don't know why there would be selling of gold. If anything, it's the insurance policy. It might not go much higher, but certainly This is the place to be at this point. Look at silver, not the same thing. It was leading, now it's kind of not losing traction, but it's just stalled. It's at 36.27, 36.20, under 35.20. That's the problem for silver, and it'll start to pull back. But the weekly chart's only in leg B. It should still go higher. I'll be back. Basil Chapman sitting for Tommy O'Brien's hour. I'll be doing my show, the Tiger Technicians Hour, straight after the 10 o'clock news.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Hi, folks. So there's a particular pattern in the Chapman methodology that I call the Eiffel Tower, where at 8:30 or 9 o'clock, where the market opens or where there's economic news, there's a sudden spiral to the upside, and then it gives it all back. And it looks like the Eiffel Tower. It's straight up, straight down. So we'll see if the E-mini goes under 59.90 in the next 30 minutes to an hour. It's probably going to test the 200-period moving average of 59.87. So I'm watching this very closely. The reason why we added to our short position on the big pop-up, we'll see if that's going to work, is that I think the upside is very limited at this particular point. All right, so before we go to the 10 o'clock news and to my show, the Tiger Technicians Hour, let me just say, Tommy always puts together fabulous the fundamentals with the technicals. So I didn't do anything. I wanted to talk about he's always talking about the yields. So the yields right now have gone to that fourth highest peak D and kind of stalled a little bit, 33. So this is the TLT to 30. 86.84, down 33 cents. But the TBT, which is the inversion, has gone to a trough D. There's a trough A. On the way down, we call them troughs B, C, and D right there. So the yields are coming down, and that's very important because I just don't want it to be part of this this chessboard of all these different parts that are negative. This at least is just out of the way. The yields are down a little bit. They're in the higher range, but they're not interfering. So with that said, I'm going to wrap it up, of course, because this is the end of the show. This is the end of the 9 o'clock to 10 o'clock morning market kickoff. I'm going to be going to the news and then to the Tiger Technicians Hour. Check out my opening call, my daily newsletter. We really had some terrific positions. Yeah, we get stopped out every once in a while for 1%, less than 1% yesterday, or 3%. But when it works, it's really nice. So with that said, I'm going to say this is what I said to subscribers today in my opening call newsletter. I always show this particular chart right here. This is the chart of the Dow every day, and I'll tell you what to look for. And it says there that after 1:30 p.m., if the Dow is more than 300 down, expect an ugly close. I think the upside is going to be limited. I don't think this is a one and done operation. This is going to be something that goes on